Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Welcome to the Bull, the Bear, and the Ugly. Well, we saw the S&P futures overnight trade down to 65.80, and we rallied up 130 points off the low. We closed at 67.11. We saw some really big, great patterns. Do it again. Sorry. Welcome to the Bull, the Bear, and the Ugly. Well, I told you volatility is back, and we saw the S&P futures trade in the overnight 65.80, and we closed at 67.11. What we saw today here was very unusual between the underlying ETFs and then the continuous contract, but ultimately later on, around 2 o'clock, everything went into almost aligned, and I'll show you we were in a positive trend right from the get-go on the opening on the S&P futures on the 15, 30, and 60. We were in sell mode on a negative trend on the 15, 30, and 60 on the underlying ETFs. There were some great buy divergences on the drop today, and then there was some really great shorts, and the patterns were phenomenal. The patterns were phenomenal. Gold dipped below 4,200, then ricocheted up 60 points. Yesterday, gold hit 43.11 around about 8:05. Apple reversed to buy on the 60-minute time frame. Great pullback on Apple, ran too. So the 15-minute time frames really were the key here today. At 1:30, the beautiful bull flag, and then the pattern before that. And I got to just show you these patterns. They are absolutely, I'm going to save the S&P and the spiders for last, but I want to show you these great patterns today. Also, Palantir reversing to sell on the 60-minute time frame. Great shorts off the 60. HIMS down 14%. Just a couple of days ago, HIMS was trading 65, now trading 51 and change. All right, so let me show you and start here. We're going to start with Tesla. So Tesla reverses to buy on the 30-minute time frame right here. You can see when Tesla reversed to buy on the 30-minute time frame, you can see it correlated with the 15 and it correlated with the 60-minute time frame, blue over orange. So when the 30 reversed to buy, the strategy is what? You buy the pullback on the deep oversold condition on the 15. Everything lined up at 11.45. This was the first pattern. The S&P futures were trading 45, 66.45, and then they ricocheted right back up about 50 points. But look at this pattern here. Okay, look at this, 430.80, and then boom. Look at this, beautiful pattern, up $8.50. Second pullback again on another bull flag right here, beautiful. And then the third pattern, well, we didn't get it, but again, look at the yellow dots, very strong. Great pattern in Tesla. This was one of the best patterns of the day in Tesla. Then I want to show you Apple reversing to buy here. You can see Apple reverses to buy on the 30-minute time frame at 10:30. And you can see right here, look at this monster bull flag. Everything set up at 11:45. All the 15-minute time frames. Wait till I show you the index futures. There were really big buy divergences that we were able to catch. We got a lot of that move. Not 50, but we caught the long, and trust me, it was monstrous. So look at Apple. First pullback here on the 15. You can see after the 30 reverses to buy. I love when the MACDs are crossing up from below the pivot. Look at the 60-minute time frame right here. The 60 reverses to buy. Okay, thereafter, another mini bull flag right here. But when you have the ADXs rallying here like this or rising, what do you look to do? Especially after the 60-minute time frame reverses to buy. The 60 reverses to buy at 12:30. What do you look to do? You buy every pullback on the 5-minute time frame. So 12:30, here it is. And then look at this beautiful oversold condition. Here's one, here's two. Look at this, 250.35. You blink, and Apple rallied. Look at this, Apple rallying about $1.70. Here's another beautiful bull flag. I mean, look at this. This is a Picasso here. ADXs are rising on the 15 and the 30-minute time frame. Another great long here in Apple on the 5-minute. And then you got another long here. Well, this one here is the same one. Okay, this is the pattern. You can see Apple pulling down to the below the 251.75, and you can see the rally here of about 75 cents. Great, great, great pattern here in Apple. All right, look at NVIDIA. NVIDIA reverses to buy. You can see NVIDIA gaps up here. Now, when you see the gap up here at 10:30, the MACDs are above the pivot. So you take the short, okay, because the MACDs are above the pivot on the 15 and the 30-minute time frame. So when you get the algorithm reversing the buy, when the MACDs are above the pivot on either all three or two of the MACDs above my pivot line, which is a solid white line, you take the short, boom, 183.50. We called shorts here, and then look at the drop, almost $3 here. We caught the long on NVIDIA, and then of course what it was it do? It rallies too. Here's another pullback right here. Now, on NVIDIA, you can see that the 60-minute time frame reverses the buy at 10:30. So when you got this pullback right here, okay, now you're in a positive trend. The 15, the 60 now correlates with the 15, and it correlates with the 30-minute time frame. This is an absolute Picasso. An absolute Picasso on NVIDIA, NVDA, Apple, phenomenal, and Tesla. These were great, great, great trades. Unbelievable patterns. And then you see another pullback here on the 15 at 145, up, and away. And let's see what happens. But again, great patterns. This is exactly what you want to trade. The patterns, they were phenomenal. And more or less, they were absolutely very, very powerful. The three best longs of the day. Avago reverses to sell on the 60-minute time frame right here. Avago at 11:30. And you can see right here on the 60-minute time frame. Here's the first bounce on the 15 right here. Avago 249 drops all the way down to 245 and change. You can see here the drop, well, probably about $3. Now, when Avago gapped up today, right here, okay, here's the 60-minute, okay, you can see the 30-minute time frame on Avago right here. Whoop, let me change the 30-minute. When Avago gapped up right here to 250, you can see the gap up right here that the MACDs did not confirm the highs, all right? Negative MACDs on both the 15, blue over yellow, and on the 30. So once you saw that, and then you got the 30-minute time frame to reverse to sell, well, you look to short the first bounce on the 15, and then the second bounce here on the 15. Because why? Why do you short this bounce? Because even though you have a buy reversal on the 15-minute time frame, that means that the lows are in for the day. You now go from a negative trend to a sell disconnect. 2 out of the 3 time frames are negative, which were the 30 and 60. You take the short, boom, right here, above 350.80, and you can see the drop of about $3. Everything I do here, we teach every day. These patterns repeat themselves, and they are absolutely phenomenal. Now, I saved the best for last, okay? Now, I have to say that today, it's easy for me because I wrote it, but it was hard for my community. Meaning I had to explain this very slowly and very, very effectively, right? Because it made me feel that when you're trading the futures markets, you need to look at the underlying ETF. So let's just take a step back calmly, and I'm going to explain what we saw today. So the math on the continuous contract, the S&P futures and NASDAQ futures, they were bullish on both the 15, the 30, and the 60-minute time frame. The underlying ETFs were bearish on the 15, the 30, and the 60-minute time frame. So you basically have what's called a sell disconnect, okay? You have a sell disconnect, all right? So, I'm sorry, you have you have a negative trend. So the S&P futures, it's late, I'm tired, it's a Friday, I apologize. So the S&P futures, I'll start again, are bullish on the 15, 30, and 60. The spiders are in a negative trend on the 15, 30, and 60-minute time frame. So what's going to happen here? Let me show you, all right? So basically, if you look at the S&P futures, right here, we'll put up the 60 here, right here. You can see that the 60-minute time frame reversed to buy at 8 o'clock, right here. And so you look at the 15-minute time frame, boom, okay, right here. We were in a positive trend, right here, coming in, ding, ding, ding. So we bought this pullback right here, and we just absolutely ripped, right? So when we got this pushed down to new lows, down to 40 and a half right here, or 41 and a half, right? What happened was I called along on this because the 15s were deeply oversold into a positive MACD. The MACDs were rising here, but so then you got the push up right here down to up to 93. So the S&Ps ran 50. But if you look at the spiders, you can see that the spiders at this time period right here, let me see what time this was. It was right here was the pullback right here, was 9:45. We were in a positive. Everything was positive on the 15, 30, and 60. But if you look at 9:45 on the spiders, okay, we were in right here a negative trend, okay, on the 15, 30, and 60. So what I did was I took the underlying continuous contract, right, for longs, and now when we got this push up, we got overbought into a negative trend, so I called the short around 93.95, and you can see the drop here, 663. They dropped 50 handles, and if you look here on the S&P, when you got this big drop right here, 97.5, when the 15 reverses to sell, you then go into what's called a buy disconnect on the futures markets because the 30 and 60 are still in buy mode. But on that drop right here, okay, on the drop right here at 11:30, the underlying ETFs were still in sell mode. Now, I'm telling you, this is probably, in the last year, one of the hardest reads for my traders. I literally had to hold their hand on this type of stuff. I got to tell you, I haven't seen this in well over a year, maybe two. Okay, now, when the 15-minute time frame reverses to buy right here, the algorithm is above the pivot. I took the short, 96. I caught the long down below 72.5, 73, because the 15 correlated with the 30 and 60. But now watch this. So we see that it reverses to buy here at 12:30. Look at the underlying ETF on the 15. Okay, later on, the 15 reverses to buy. Now, when the 15 reverses to buy, I know that the lows are in for the day, which were right here at 11:45. And then here's the killer right here. So now the 30 reverses to buy right here. The 30 reverses to buy. So now you go into a buy disconnect on the underlying ETFs, and you're still in a positive trend on the S&P futures on the 15, the 30, and the 60-minute time frame. Now, look at the S&P futures. When the S&P futures reverse to buy right here at 12:30, you see this pullback right here? This is a beautiful pattern. The 15 correlated with the 30 and the 60. The spiders reverse to buy at 2:15. S&P futures pushed up. Look at this. from 66.65 all the way up to 67.11, right? And it was a monster long. Now, when the 30-minute time frame reverses to buy on the spiders, okay, I'll type in the spiders right here. You go into the buy disconnect, okay? The 30 reverses to buy, you got the buy disconnect, and then what do you look to do? You buy the first pullback right here on the 5-minute. S&P futures got down to the, I believe, the even. We were looking to buy below 02.5. This is the bull flag right here. So this technically is the first pullback on the 5-minute time frame after the 30-minute spiders correlated with the 15. You have a buy disconnect on the spiders, and you're in a positive trend on the S&P futures. You buy them, boom, and then at the end of the day, we got another great pullback here. I said look to buy S&Ps below 0.02, got down to even and a half, and they ripped, and you can see here they ripped about 10 handles, 11 handles at the end of the day. So today was a tough read for the retail investor using my software, but I have to tell you, this was an aberration. When the two are completely night and day, eventually they caught up to a buy disconnect with a buy trend on the S&Ps. I was able to read it and able to identify the patterns and to help. This was a tough one, like I said, but eventually you'll understand it and read it. And today people were saying, well, Steve, if the spiders are negative on the 15, 30, and 60, and the S&P futures are bullish on this 15, 30, and 60, which one do you go with? Well, for longs and any pullbacks, I'm looking at the S&P futures. But any rallies, if we're still in negative trend, I'm looking at the underlying ETFs like I did on the two shorts above 96, and they got absolutely kabooshed 50 points. So this says something that I teach every day, and I wanted to share that with you. It might sound a little confusing here, but in the live action, when everything is going dynamically, the key is when those 30-minute time frames reverse to buy on the Qs and on the underlying ETF, the spiders, I knew that the lows were in for the day, and on the next pullback on the 15-minute time frame, look to back up the truck and go long. So again, S&P futures closed at 67.11. It was option expiration. We were supposed to have retail sales out yesterday and PPI numbers today. Nothing happened. We were supposed to have the employment number last week, and that didn't happen. So what basically, we saw a lot of action in gold today. We saw a lot of great trading. I think we did probably north of over 100 trade ideas today. My community of traders is growing. I have so many people from around the world coming to join me, and it's just a great community, and I hope you come and join because I want to teach all of you. Like I said, you saw the beautiful pattern in Tesla, you saw the beautiful pattern in Nvidia, you saw the beautiful pattern in Apple, and some really great shorts in Palantir. Everything I do is based upon a methodology, and that really, to me, is what gives me the confidence to be able to pull the trigger, because I'm able to identify the methodology, the condition, and I know how to trade it after that. All right, when I get back, I'll tell you what I expect for Monday. Okay, so with the government shutdown, October 20th here, we have economic indicators, and really nothing here, because obviously we have CPI on Friday, but with the government shutdown, we're not going to have any economic numbers here. Okay, so with that, I want to see if right now the spiders are still negative on, and the Qs on the Russell are still negative on the 60-minute time frame, whereas the spiders and the Qs are bullish on my indicator 4 on the 15 and the 30-minute time frame. I think the market's going to be in a range bound here. Again, we really didn't have such a big sell-off here off the high. 68.76 was the high, I believe, on the S&Ps. We dropped 300 points to the overnight, and then rallied here 120. The market's not ready to go down yet. But, we don't know what's going to cause these gaps to be filled below. And, gold dropped 190 points off the high, 192 points before rallying 68 points off today's low. So from high to low right now, gold's only down like about 130 points off the high. With that being said, for Monday, I want to see if we get a pullback on these 15 on the 15s and the 30-minute time frames. I think the lows should hold the 66.41 and a half. So if we do get a pullback, I'm expecting an oversold condition on the 30, where I think you take some longs. If we do gap up and the 60-minute time frames reverse to buy, well, if they get to a really significant overbought reading, I look to short them and then look for a pullback for longs. Again, I think these gaps are going to get filled below the market, the 62.50, the 60.50, and hopefully maybe the 56.70. And after, there is a gap down to 51.50, but I will tell you, I don't know. We'll see. Right now, everything's hunky-dory. Everybody's complacent, but we'll see. We'll see what happens. All right. When I get back, I want to explain a process that you need to know. So when trading the markets, today we saw gold absolutely spike down and then V bottom, right? And one of my friends, pretty much, he has a prop account and he kind of blew it up, right? And he's very good. And when I talked to him, I said, when you see increased volatility, you cut your position sizes in half. So if you're going in and you're trading, sometimes, the right thing to do is when you see increased volatility, instead of doing maybe like 40 micros, maybe you cut it down to 15 micros or 18 micros, right? If you're trading 60, maybe what you do, you cut it down to 20, 25 micros. So I think what's really important is when you see increased volatility, you go wider on your ranges, you scale in a little wider, but you cut down your position, meaning if you're going to go in on 30, maybe going on 15. If you're going to trade 5 big ones, maybe go in on 3 or 4 big ones on E-minis versus the micros. So I think it's a lesson learned. And what I mean by that is I want people to realize and understand that you got to make quick adjustments in the market. Market doesn't care about you. The market has no soul, like I tell people all the time. But the most important thing is you got to adjust, right? Think of yourself as a coach. Your players, you're down 21-0 at halftime. You go into the locker room and you make adjustments. Well, in trading, you have to make adjustments on the fly. All right. With that being said, thank you for joining me tonight on The Bull, the Bear, and the Ugly. Please hit the subscribe button. Please leave a comment. Also, please join my community of traders from all around. My website is sktrading.live. And I would love to hear from you and see you. If you'd like to follow me on social media, it's official, Stephen Kalayjian, X, Instagram, and TikTok. Also, I will be streaming on my SK Trading YouTube this Sunday night for the opening and on the session, for the overnight session. And so be there, get there early. I'm super excited to do this for the first time. It's by popular demand. Everybody wants to do it. So I'm ready. Let's do it. So also, if you like to reach me, my cell phone number is 914-500-7484. I'd love to hear from you. All right. With that being said, everybody, it was a great week of trading. God bless you. Enjoy your family. Enjoy every second. And most of all, God bless the United States of America. See you Sunday night.
Thanks for tuning in to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe at sktrading.live. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.